Welcome to The Explainer. Today, we're diving into a technology that's set to completely reshape how we invest, and we're looking at why India really needs a new law to get ahead of the curve. So let me just start with a simple question for you. What if you could own a piece of a prime commercial office, a really valuable asset, for what you'd spend on a nice dinner out? I know it sounds a little bit like science fiction, but this is happening right now.
And it's all possible because of something called tokenization. Now, don't let that techie name throw you off. The idea behind it is actually super simple. It's really just about breaking down huge, expensive assets into tiny, affordable pieces for everyone.
Okay, let's use a real-world example to see exactly how this works. Just picture a massive 10 crore rupee commercial building right in the heart of Mumbai. I mean, traditionally, an investment like that's been completely off limits to pretty much everyone except for huge companies or the super wealthy. Tokenization takes the ownership rights of that building and converts them into digital tokens. These little tokens get recorded on a blockchain, which is basically just a super secure, transparent digital ledger that can't be messed with. So in simple terms, you're digitally slicing up the building into tiny ownable shares. So now, that 10 crore building is represented by 1 million digital tokens. And each of those tokens is like a digital certificate, a verifiable proof that you own a tiny piece of that actual physical building. And this, right here, shows you just what a game-changer tokenization is. Before, investing in something like that was exclusive, it was slow, you were buried in paperwork. But now, anyone can become a part owner with just a few thousand rupees, and the transactions are quick and digital. It's a true democratization of wealth. But here's the catch. There's a big problem. Right now in India, this whole exciting new world is basically operating in a legal gray area. Think of it like the Wild West for digital assets, full of opportunity, but also packed with some serious danger. This lack of rules brings up some really important questions for any investor. I mean, what happens to your money if the online platform you used just disappears overnight? Who really owns that building? And how on earth can you prove your little piece of it is yours? You see, the real issue here is that there's no legal definition for what a tokenized asset even is. So your ownership rights, they're not clearly protected. And maybe most importantly, nobody knows who's in charge. Is it SEBI, the securities regulator, or is it the RBI, our central bank? This confusion means if something goes wrong, you have nowhere to turn. And believe me, this isn't just some abstract legal problem. For you, the investor, it means a very real, very high danger of fraud and scams. Without a legal framework holding people accountable, your entire investment could literally just vanish if a platform failed, and you'd have almost no way to get it back. Meanwhile, the rest of the world is not waiting around. Financial hubs like the UAE, Singapore, and the whole European Union, they're already putting clear, strong laws in place for tokenization. If India doesn't get its act together, we really risk seeing both financial innovation and a lot of capital just pack up and move to countries that offer more certainty. So the solution to all this chaos is what we're talking about today, a dedicated tokenization bill. And this isn't about killing innovation. It's about building a safe and stable foundation so it can actually grow and flourish. First off, it's absolutely crucial to understand this isn't about speculative cryptocurrencies. Unlike crypto, which is often just, all over the place, a tokenized asset is directly backed by something real and tangible, like a piece of property, or gold, or a bond. That fact alone makes it way less risky and a lot more transparent. So, a properly written bill would create a safe marketplace by doing 4 key things: defining what these assets actually are, making rules to protect investors, setting up a clear tax system, and finally, telling everyone who the referee is, assigning regulators to oversee the whole thing. But this is about so much more than just making a safer market. It's really about building a stronger, more modern digital economy for all of India. The ripple effects would just be enormous. The benefits really break down into 4 main areas. Of course, the most important is safety for investors like you, but it also gives our own tech startups the legal clarity they need to innovate here at home. Just think of brilliant founders staying in India instead of moving to Singapore. It would also attract foreign investment from people looking for secure, high-growth opportunities. And it just makes our entire economy more transparent. I mean, the contrast is just so stark. Without a bill, investors are left unprotected, our startups are forced to move abroad, and capital leaves the country. With a bill, we create a secure environment where investments are protected, innovation thrives right here at home, and our economy becomes a magnet for global capital.
Okay, so what's the path forward? What are the key things you should take away from all this for India's digital future?
Well, in a nutshell, a tokenization bill is way more than just some technical piece of legislation. It's a foundational document that makes digital assets secure, it protects everyday investors, and it creates the right kind of environment to make sure the next wave of financial innovation happens in India, not somewhere else. And that leaves us with one final, really powerful question. This technology is coming, whether we have a law for it or not. That's a fact. So the real question is, are we going to build the right framework to actually harness its power and position India as the next superpower of the digital economy? The path we choose right now is going to decide that answer.